Welcome to this explainer, Wall Street's recent report card season. Well, it's been full of some absolutely wild contradictions. Today, we're going to dive into three completely different companies to see how they fared. We've got three distinct earnings stories lined up, and they offer three totally different vibes on what the market currently values. So think about this for a second. How is it possible that a business can do absolutely everything right, turn in a totally flawless transcript, and still face the immediate wrath of investors? It sounds crazy, right? But it actually happens every single August on Wall Street, and let me tell you, this season was certainly no exception. Here is our class schedule for today's explainer. First up, we'll look at Intuit's flawless year. Second, nCino's newfound profitability. And finally, Coinbase, the student who decided to just skip the test completely. All right, let's jump right into part one, Intuit's flawless report card. Intuit closed out fiscal 2026 exactly the way every accountant dreams of closing a ledger, squeaky clean. I mean, they brought in a staggering $21.4 billion in full-year revenue. That's a stellar 14% jump. And their fourth quarter alone, that came in at $4.4 billion, which was also up 14% year over year. The victories literally stacked up across the board for them. Their GAAP-diluted EPS hit $16.46, a really solid 20% jump. But, the real flex here was Credit Karma. Revenue there jumped 16% to $743 million, basically riding this huge wave of personal loans and auto insurance. Meanwhile, TurboTax Live grew by an astonishing 37%. It actually makes up more than half of all TurboTax revenue now. Turns out, even as Gen Z and millennials file their own 1099s for their side hustles, they still really want a human, or, an AI checking their math just to be sure. But wait, here is the major catch. Intuit is basically the financial operating system for an entire generation, right? Yet they are bracing investors for a pretty rocky road ahead. They completely aced their freshman year with that 14% growth, but their fiscal 2027 guidance, it calls for just 9 to 10%. It's kind of like getting handed a much, much harder syllabus for your sophomore year, all because macroeconomic pressures are tightening up budgets. Intuit proved that having a great year simply isn't the same as having a great outlook. Let's move on to part two, nCino, profitable but still grounded. So nCino actually executed a massive turnaround. We're talking a real tangible swing from a $9.3 million operating loss a year ago straight into a highly anticipated $13.6 million profit this quarter. They finally did something they literally haven't done in ages. They made actual money. And their overall revenue even beat Wall Street expectations, coming in at $161 million. And they stacked up some legitimately impressive wins on top of that profit, too. Their operating margin climbed up to 25%. They announced a brand new $100 million stock buyback, and that is on top of the $300 million they've already repurchased. Plus, they secured early renewals from 4 major U.S. enterprise banks. They even got a massive Japanese bank to consolidate its lending operations right on their platform. By all traditional measures, this was a highly, highly successful quarter. But here is the absolute wildest twist. None of it mattered. Not the profits, not the renewals, not the buybacks, nothing. The stock immediately dropped roughly 10% in after-hours trading. Investors basically sent them straight to the principal's office. Why? Well, the panic was entirely due to deceleration. nCino posted 8% revenue growth this quarter. Now, that doesn't sound terrible, right? Until you realize they were putting up 11% just 2 quarters ago, and their future guidance implies things are going to slow down even more. You see, in the software world, valuations are built on rapid future growth, not just baseline profitability. It's basically like a running back posting solid stats in a total blowout loss. Sure, the box score looks totally fine, but nobody on the team is actually smiling. nCino proved the hard way that profitability absolutely does not buy investor patience. And finally, let's look at part 3. Coinbase, the kid who is just skipping the test completely. While Intuit and nCino were busy sweating over traditional quarterly report cards, Coinbase was out there launching tokenized equities. Going live on their own Base network, they're using data feeds to keep these tokens tracking the exact real-time prices of heavy hitters like Nvidia, Apple, and Meta. Coinbase has been chasing regulatory legitimacy incredibly hard lately, and with this move, they are effectively putting Wall Street directly onto the blockchain. This totally changes the game. Think about it. Instead of buying a share through a traditional brokerage, where you're restricted by market hours and forced to wait around for clearinghouse settlement, you can just hold a blockchain-based token. It's tradable 24/7, it settles entirely on-chain instantly.
This is essentially the crypto industry's answer to the era where Robinhood democratized stock ownership, except now, the shares literally never sleep. The line between a crypto asset and a traditional stock just got significantly blurrier, and Coinbase is positioning itself perfectly to own that blur. So, pulling this all together, we can clearly see that Wall Street's expectations often completely defy logic. On one hand, you have Intuit getting punished despite flawless past performance just because their future outlook softened up a bit. Then you have nCino punished despite finally swinging to profitability, all because they just aren't growing fast enough anymore. And then you have Coinbase, who is getting rewarded for an entirely new paradigm by proving that even a traditional powerhouse stock like Nvidia can now live natively on a blockchain.
Which leaves us with a pretty provocative question for you to consider when looking at your own portfolio strategy. In a world where flawless earnings are punished and stocks live on the blockchain, what actually defines a good stock in today's financial ecosystem? The rules just seem to change every single semester. Take a moment to really think about that as these two worlds, traditional finance and the blockchain, continue to collide. Thanks so much for joining me for this explainer, and keep learning.